Alright, so gold just broke the 1770 level, right? And to us, that's not a surprise because we have been talking about how gold has a very high chance and probability of breaking and touching that 1770 area. So what's next? Hi there, so in this video here, we'll talk about how gold has just broke 1770 as, we are speaking right now. But what I want to do is to really show you some of the recordings that we have done. In fact, it's even one of the ads that have actually shoot out, and I'm not sure if you actually saw the ad before. But I'm gonna include some of the recordings over here to show you, from the very start how we have start to forecast and anticipated that there's a very high chance that gold will eventually fall, right, and tag the 1770 area. Of course, okay, nothing is going to be 100% in the market, but based on certain method of analysis, okay, based on price patterns, based on Elliott wave patterns that tends to repeat itself over and over again, combining that with the seasonal data, the seasonal trends, when both are aligned, okay, the chances of you getting it right, it's pretty much quite high, right? And that's how we did our forecast and our analysis on that. Okay, so without further ado, I'm going to show you some of those recordings in this video here, so that not only you'll be able to pick up a thing or two from this process, but if you really enjoy this entire way of looking at the market, analyzing the market, and trading using this method, then by the end of this video, okay, again, what I'm going to do is I'm going to offer you a service, okay, and see if that is something that you're looking out for and is able to help you in your trading and investing as well. Okay, so without further ado, I'll jump straight into some of the recordings, let you walk through the whole process, and I'll see you again very soon. Now, if you look at this chart over here, I do have some analysis that's already in, as well as some of the information presented over here. So the method that I'm approaching the market is basically called the EWS methodology. In short, it's really about Elliott wave technical principle plus the seasonal analysis of the market. So in this case here, the opportunity that we are looking out for is XAU USD, which is gold. And based on the past 10 years of seasonality and statistics, between 3rd of September to its 1st of August, there's a good 90% chance that gold will actually drop. So in this case here, in 22-1, during this window of period between 3rd of September to 1st of October, we'll be definitely looking out for shorting opportunity when I'm looking at the gold instrument. And combining that with a technical part and technical analysis, okay, first up, you can see right now that we do have what we call a crawl pattern. Okay, we have an impulse push and market continue to climb higher, but in a very slow and corrective nature. We call this a crawl pattern. And on top of that, what we see is that we are retesting that previous high, which is around 1832 zone, around that level, where you can see historically it has been tested 1 time, 2 time, and at this time it's the 3rd time. So combining this simple technical analysis is also telling us that there's a good chance gold will actually see some resistance and perhaps have a reversal and rejection and start to move lower as well. Okay, so from now onwards, I'll be focusing on very clear direction, only looking at sell opportunity, because the seasonal data has told me to look up for the sell side. From a technical point of view, okay, the pattern plus a simple support resistance understanding is telling me to look out for a sell trade as well. So from here, all I really have to do is just wait out for the entry to kind of fit into the criteria that I'm looking out for, and all I have to do is pull the trigger, enter on the sell trade, manage my risk, manage my trade, and ideally we're probably gonna see some profits from here. So that's about it, right? It's really that simple using the EWS methodology. Okay, first up, we look at the seasonal statistics to tell us which window of period, what direction we want to focus on, and then we just utilize the technical chart to tell us and give us some kind of confirmation if we want to take that trade. And the third step is basically just execute and manage the trade along the way. In terms of gold, okay, so yesterday we briefly talked about how you want to pay attention to the 1804 level. Okay, so kind of like, it's continued to its flat. So there's a good chance this will continue to come back down, right? Because of this pattern here. Okay. So for those of you at short-term trading, yes, gold is still presenting you that opportunity. Right, so now that you have seen the entire process from, where we started to anticipate, for gold to drop all the way until right now today, okay, as I'm recording this, what's next, okay? So now that it has touched the 1770, what should you be doing? Are you going to sell it right now? Are you going to buy it? Okay, now to me, first off, I would suggest if you're not involved in any trade on gold, don't trade it first, okay? Because what we have here is basically an impulse push. Okay, now the seasonal stats are still valid because we are looking at all the way until 3rd of October, where you have a high chance where gold will continue to drop. So from a seasonal perspective, we're still looking at sell side. Okay, however, from a technical point of view, now that it has broke the 1770 impulsively, okay, what next is that you would want to wait for a mini flag that's going to form below that level. And when that happens, okay, you have the high probability trade where you can continue to look for the sell side. Okay, now, if let's say you manage to sell it at the top over here, because of you watch the ads, okay, that you actually capitalize on it, or if today you manage to sell it maybe somewhere lower here, at 1804, and right now you're still running on this trade, then my suggestion to you is to keep at least a portion of that trade running, because you might have that very high possibility this can continue lower. Okay, so what I'll do is I'll suggest you to maybe take partial profits, leave the remaining position running, okay, and you might even, get a home run, I would say, to see price coming down all the way back to that previous low around 1690 area. Okay, so that might happen, right? Again, it's a possibility. Okay, so again, if you took action, right, from shorting gold, either through the ads, I don't know, or maybe you saw this pattern here and you got involved in the short and you're still holding on to this trade, then congrats, okay, and continue to manage this position of yours, okay. So with that, if you really enjoy this entire process, you witness how we look at the market. It's something simple, straightforward, right? We can deploy the seasonal data to help us identify a certain seasonal trends. We look at the technical patterns, which is simple, okay, to identify which are the direction. We combine them to find a complement. If you enjoy something like that, we call this the EWS method, and we have such service where we kind of like compile all the seasonal data for you, mainly on the FX side, the Forex market. Okay, and you believe that this data here are able to help you in your currency trading, your FX trading, then feel free to check out the link below that I've included in this video, and you'll be able to find more information about the EWS method from there. So with that, all the best to your trading, and I will probably see you very soon again in our subsequent videos, right? So see you guys.